One of the main goals of this channel is to show you exactly how the market makers manipulate the price action. This is my first market reading session. I will go through from here to here and discuss what might have happened, how they managed to hunt both buyers and sellers within this region, and how these market makers manipulate the price action to make money from it. This is NEAR, one of the top crypto coins, and its 5 minutes chart. Price is having an uptrend, and over here it has made a good red candle with a very small wick or shadow towards downside. Now this is a resistance level. When you zoom this out, it looks like this. A perfect 5 minutes resistance level. If we check the past few days, we can see it has worked as a support level quite a few times and finally broken that price zone here. Now, since it has become a resistance, what are the retail traders going to do when the price reaches here next time? We mark the level like this, with a line, and wait for price to reach here, expecting that price might reject from this level or reverse from this zone. So what we do, keep our positions ready, and once we see this kind of a good red candle, that is enough for us to jump with maximum leverage possible in our account. That is our trading psychology. That is what the majority of the people in this social media who does these so-called trading courses ask you to do. Some people might consider this a bearish engulfing candle because this last green candle is covered and overlapped by this red candle. And not a long wick here, meaning that buyers have not tried to push the price upwards. So what they have done here, they have made a perfect example for you, a perfect manipulation for you to convince that market is about to go down. What would you do, or what most of the retail traders do here? Short the market. This candle is more than enough for a retail trader to take that decision, because this scenario is matching with all the basics we learn with technical analysis. There is resistance level above there and price action reaching this level for the first time, meaning the higher chances are to reject from that level. Price straight away rejected and made a good engulfing red candle with nice selling pressure. No wicks to the downside. This perfectly aligns with what we use to learn about bearish engulfing model. So you have all the reasons in the world to short this market, and that is what market makers want people to do. But what happened? After this red small candle market has done two bullish candles. What is the psychology behind these two bullish candles? When these kinds of candles are formed against your trade, what we tend to do is to come out from our trades. Because we hate to see a trade going against us, we hate to lose our money. The high of this second green candle has almost reached here, covering half of this massive red candle. So retail trader would think that market is going up again. The other thing is most of the trades taken around this kind of support resistance areas are highly leveraged. Seeing this kind of movement will discourage the people with leveraged positions, because most of us are afraid to lose our money. That is our psychology, isn't it? Just think yourself, have you done the same thing I'm explaining here? I bet you have done it before. Market makers know this psychology. They have included all these philosophies when they designed these algorithms which drive these markets. They are not made for you and me to make money with millions in position sizes. It is true that some people make money here, but most of those are negligible small profits which market makers don't even care about. When people make $1,000 profits, they might make $50,000 in profits. That's how these markets work. I need to highlight another point here. Please understand how important it is to learn technical analysis properly. You need to learn technical analysis to avoid executing trades where the whole world is waiting to jump in. 75% of the people trade according to what they learnt with technical analysis. So if you learn it properly, you can keep yourself out of trouble where most of the people jump in with their positions. If you are a beginner, it is too early to understand what I'm telling here. Watch my technical analysis premium course videos, and you will understand this reality in future. Okay, let's get back to this area. When this second green candle breaks the high of this first candle, new traders think that the price is going up again. They open their buy trades here. That is what happens here. In future, I will prove you these things. Market makers create all these candles for a reason. They make profits on all these candles. This is 5 minutes chart, and if you go to 1 minutes chart, you will realize how they mentality influenced the new traders to open up their positions in these areas. After creating these two green candles, they have brought the price down. First it went up, then came all the way down to here. So when it reaches this level, it looks like a massive red candle. I mean, before creating this wick, this is how it looks. What is the psychology here? Imagine you are here in front of the computer when this happens. You assume that market is finally going down. What people do? They enter with short trades again. That is what exactly market makers want us to do, and that is why they bring the market down. They have two reasons to bring the price here. First, they want to trap the remaining long traders who entered on this candle. Second, when they create this kind of long bullish candles, there are imbalances created on these areas. These imbalances are mostly their orders created by the algorithm. This algorithm play big orders to create this kind of good pressure, long bullish candles. Not sure whether you heard about this before, this price action is run by an algorithm. I have seen some retail traders mentioned in social media that these price actions are run by actual people who monitor buy and sell orders. No, that is a massive misunderstanding. All these calculations are automatic, and it is done by an automatic algorithm. I will do a whole different video for that. Anyhow, these long candles are created by their orders, and imbalances are being created with that. So what happens is they cannot fill their own imbalances with another order from the algorithm. These imbalances have to be filled with orders coming from outside sellers. So normally, when algorithm creates this kind of imbalances, they always bring the price action down to get those orders filled. This is about market making, and I'm sure you didn't understand what I told here. If you didn't grab what I explained before, don't worry, you'll learn all these things in future. So they brought the price down here and got their imbalances filled by outside orders. But again, the price has gone up, and all the shorters who shorted in this candle got trapped again. Somebody might ask how I'm telling these things. That is the experience came out of hours and hours, sitting in front of the computer, watching these charts, watching how live orders came into the markets, monitoring order flows, how many things I have done in my past to get into that 5%. This price action, these candles, they are made according to the reaction of the market makers. It is an outcome against the money which was coming towards the market at that particular time period or particular time frame. That is why every time it is different. If we take a candle, this candle is unique to the money which came from outside trades. Another candle in future will not take this same size, length or shape again, because it is a result of the reaction from market makers against the money which came around that time. We never know the amount of money which can come during the next 5 minutes. That is why these markets don't have exact proper structures. This behavior might not happen next time when it reaches a resistance level. It might reverse and fall down straight away. It all depends on how much money comes towards it. Try to understand that. You need to start thinking like a market maker. Rather than drawing lines and making arts on these charts, you need to learn how to read live price actions. So over here, the price has not reversed and it hasn't gone up either. It has done a consolidation nearly more than an hour up to this place. It has played with all your minds, trapping all of you one by one. And finally, when they see no more massive-sized trades coming in, it has broken this level and started going up. Look at this massive buy candle. New people easily fall into these traps. When they see this kind of good pressure candle, they tend to open buy trades. Again, they all got trapped. We all go out from our trades when we see price going against us like these two candles here, because we cannot afford to lose our high leverage position. So we go away with losses or we get stopped out. New traders jump in with their positions everywhere. They have no clue what they are doing. They try to find opportunities on every candle. They are in such a hurry to make money. So most of the traders trade with 1 minute chart when they first start. That is the most difficult time frame to deal with, and people have no idea about it. Try to understand this, and learn to analyze the market and learn to read these price actions in live markets. If you do it the right way, I can assure a bright future ahead of you. If the market wants to go up, it will not go as a straight line upwards or just creating bullish candles all the way up to here. If it happens to go up like that, they will end up paying a lot of profits for the people who took long trades. Market always moves towards somewhere for many reasons. Not even one reason, but they got many reasons. The main reason is they need to hunt the stop losses of regular traders. This market always run behind the money. If massive positions are getting opened somewhere, market will always move against them because it cannot sustain while those big orders running. If a lot of money is not involved, then the market will not go there. The normal scenario is that a very small number of trades are getting opened in these areas with very little money, because all the retail traders with good leverage positions have already been taken off from the market around here. Now, that is the time for the price to start his climb again, breaking all these levels. And some people do break out trades around these areas, and that's why they bought the market down again. Once this zone gets broken with a proper candle body, people jump in with long trades. Usually, when this candle is closed, retail traders consider it as a confirmation of breakout. Then they open their long trades on this candle. Look what they have done. They bought the market down up to here, where the majority of breakout long trades got opened. So this is how we read the live market. If you want to become a successful member in this trading world, if you want to get into that 5% of the winning bunch, then you should learn how to read these markets. The live price action. That is the best tool you can use to take better trading decisions. We need to follow them, the market makers. We need to read what they are going to do next. We need to read which stop loss they are after. There is no point following other sellers. We need to follow these market makers. You need to be very smart on this game. You are fighting with a business which is having 95% of success rate. From now on, take greater responsibility for your actions and decisions, because your money, your success, and your future in trading are all your responsibility. Don't depend on all the lagging indicators. It is not easy, believe me. It will not come within a week or two, but one day you will realize that you can win this world if you do it the right way. So start reading the live price action. I can explain all the way up to here, but that's enough for today. I will bring more market reading videos like this in future. And there are things which I mentioned on this video which I haven't explained before. Things like imbalances, breakout trades, and market algorithms. I will talk about all of them in my future videos. If you want to learn trading from zero, this is the channel you want to be with. You will find powerful lessons which covers all the aspects about trading. Doesn't matter whether it is crypto, Forex, or any other financial market. And very important content regarding trading psychology, helping you build the right mindset to handle whatever challenges the future brings, or how you can overcome the failures you already done in your past. Trading is all about a mind game. If you don't learn to control your mind, there's no way you'll succeed as a trader. Please do not forget to check my other videos. Leave a comment to share your thoughts and subscribe to the channel. Trust me, you won't regret it in future. Good luck, everyone.